All right, let's get right into it. If you're running a really successful business, but you just feel like you're stuck on a hamster wheel, this explainer is for you. We're going to break down one of the single biggest things holding leaders back: financial entanglement. And we're going to lay out the exact steps to turn your high effort job into a high value, sellable asset. I mean, does this hit home for you? Like, really hit home? For so many founders, this is just daily life. This feeling of chaos where the line between your personal finances and your business finances has just totally blurred. Look, that's not just messy bookkeeping. No. It's a fundamental structural flaw, and it's putting a hard ceiling on your growth. So let's actually put a name to this problem: the complicated checking account. It's the default mode for so many businesses, right? It starts out of necessity, but it really, really quickly becomes this golden cage that keeps you, the leader, as the single point of failure for the entire operation. And what's wild is how these symptoms all feed into each other, creating this vicious cycle. Think about it. Your personal hustle dictates what the company can spend, so the business literally can't function without you. Every single dollar of gross commission income, or GCI, relies on your direct work, which means you can never ever step away. Of course, that leads to burnout. But here's the real kicker: you have no idea if your business is actually profitable or if your lifestyle is just hiding some really terrible margins. So all of this brings us to this really powerful idea: the fragility tax. Now, your accountant is not going to put this on your P&L statement, but trust me, it is the most expensive tax you are paying. It's the cost of you burning out. It's the cost of indecision because you're not sure what the firm can truly afford. And maybe the biggest cost of all, it's the massive suppression of your company's value because no investor on earth can figure out how healthy the asset actually is. Okay, so how do you stop paying this insane hidden tax, right? Well, the answer starts up here in your head. It's a total mindset shift. You have to systematically, and I mean systematically, separate the two different hats you're wearing: the labor you do in the business and the equity you hold as an owner of the business. They are not the same thing. And this right here, this shows the whole journey. I mean, look at this. Over on the left, you've got the hustle. That's probably where you are now. You're guessing about payroll. It feels like a high-stress job you can never leave. And let's be honest, the value is you. But on the right, that's the asset. That's the goal. The business runs on a clear budget. It's a standalone thing that you own. The value is in the platform. This is the whole game, people, moving from operator to owner. So how do we actually do this? Well, the framework is super simple, but that doesn't mean it's easy. First thing, you give yourself a salary, a real, fixed, predictable salary for the job you do in the company. You're an employee. Second, you take an owner's draw from the profits. This is totally different. This is your reward, your ROI for being the investor who owns the asset. Just doing this one thing forces the business to stand on its own 2 feet. Okay, so that's the why. You get it. Now let's get tactical. Let's talk about the how. And there's a really clear step-by-step process for this. It's called the profit first transfer. In the very first move you're going to make, it's super simple, and it is totally non-negotiable. It all starts with one number: 5%. And listen, don't get hung up on the number itself. This isn't about perfecting the math right now. This is about building the muscle, building the discipline. Here are the 3 steps you can do, like today. Step 1, go open a brand new bank account, just for profit. Seriously, it's that important. Step 2, every single time money comes into the business, any money, the very first thing you do is move 5% of it into that new profit account, before rent, before payroll, before anything. And step 3, define your salary. Ask yourself, what would I pay a rock star to do my job? That's your salary. Everything else is a potential owner draw that comes from that profit account. All right, so once you've built that initial habit, once that discipline is locked in, now we can build out the whole system. We call it the 4 financial pillars, and we're going to map it all out using a tool called the bifurcation map. And don't let the fancy names scare you. Bifurcation just means splitting something up. In this case, your money. Basically, this map gives every single dollar a specific job. You've got your OPEX account. That's for all the day-to-day stuff, right? Staffing, rent, operations. Then a separate tax account, so no more surprise tax bills. Next, and this one is huge, you've got a moat account. This is your 6-month cash reserve, your safety net. This is what lets you sleep at night. And then finally, the best one, your profit account. That's the wealth account. That is the whole reason you're doing this. So what's the point of all this? This whole structure? Its entire job is to remove that financial entanglement constraint we talked about earlier. By literally physically putting the money into different buckets, you force the business to survive on what it actually earns. And for the first time, maybe ever, you can see your real, true margins. You're finally building something that has value completely independent of you. So, now for the tough love part. It's time to get real and take an honest look in the mirror. We're going to run a few quick diagnostic tests to see where you really stand, to see if you're truly building an asset. First up, the absence test. And be honest, if you just disappeared for a whole quarter, I'm talking no phone, no email, you're on a beach somewhere, would the systems you've built automatically pay your salary and calculate the firm's profit without you? Or would the whole thing grind to a halt because you're the only one who knows where the money really is? Number 2, the autonomy check. Can your team go out and do their jobs using the company's money without being scared that they're accidentally spending your mortgage payment? Do they have the freedom and clarity to execute, or are they constantly walking on eggshells around the finances? And the last one, the asset validation. This is the big one. If a potential buyer wanted to look at your company's books tomorrow, what would they see? Would they see a clean, professional, sellable asset that deserves a premium price? Or would they see a high-revenue hustle that's just a total mess, completely entangled with your personal finances, making its true value impossible to figure out? Look, the way out of this trap isn't about working harder. It's about building smarter. It all comes down to these 3 powerful actions. Separate the accounts, protect the profit, build the asset. So at the end of the day, the real question you have to ask yourself is this. Are you building a business that serves you, or are you building one that you will forever be a slave to?